Welcome to Market Nerd, where seasoned analysts break down listed companies on the Philippine Stock Exchange. Don't forget to like, subscribe, and hit the bell to get the latest developments and investment ideas in the financial markets. Let's dive in.
All right, so today we're taking a deep dive into a company that's making waves in the coconut product world.
Waves. Yeah, that's a good way to put it.
We're talking about Axelum Resources Corp. You'll find them under the ticker AXLM.
They're based in the Philippines, but their reach is global.
And they're a major supplier to some pretty big names. You've probably heard of Vita Coco, right?
Oh, for sure.
Well, Axelum's a big part of their supply chain.
Absolutely. And their 2024 SEC filing. That's what we've got in front of us today. It's a goldmine of information.
And our mission today is pretty simple. We're going to decipher that financial story, figure out where Axelum stands right now, and see what we can glean about their future.
Exactly. We're going to be going through their financial statements.
Yeah, the balance sheet, the income statement, and the cash flow statement.
Those are the core pieces of the puzzle, right?
Absolutely.
And our main focus is going to be comparing their 2024 numbers to those of 2023.
Right. Year over year changes.
And where it makes sense, we'll also look back at 2022 to get a sense of the trends.
See the bigger picture?
But what's really interesting, I think, is how the company's management, what they're saying about the challenges and the opportunities they see on the horizon.
It's like getting a peek inside their strategic thinking.
Exactly.
So if you're curious about the inner workings of a company like this, you want to see what's really driving their performance, then this is the deep dive for you.
Yeah, we're cutting through the noise and getting to the heart of it.
Okay, so let's get started, shall we?
Let's do it.
First up, the balance sheet.
This is the snapshot, right?
It tells us what the company owns and what it owes at a specific moment in time.
Yeah, financial snapshot.
So when you looked at their 2024 balance sheet, what were the changes that really jumped out at you compared to previous years?
Well, the first thing that catches your eye is the strength of their current assets.
These are things that can quickly turn into cash, right?
Yeah, exactly, within a year.
So what are we looking at?
Well, their cash and cash equivalents, they saw a pretty big jump, going from $1,951.014 million in 2023 to $2,336.093 million in 2024.
Whoa, that's a sizable increase in liquid assets.
Yeah, it is.
So what's the story there? Where did all that extra cash come from?
Well, the filing points to a couple of key factors.
Okay, let's hear it.
Firstly, they had their initial public offering, the IPO.
Right, they went public.
That brought in some capital.
Makes sense.
And then they also invested some funds from a preferred share subscription into short-term deposits.
Smart move, putting that cash to work.
And it actually paid off in a big way because the interest income from those deposits, it went up like significantly from $32 million in 2023 to $81 million in 2024.
So they're not just sitting on that cash, it's actually generating more income for them.
Exactly, making that money work.
Okay, so that explains the big jump in cash.
Yeah.
What else did you notice on the current asset side?
Their trade and other receivables, that also saw a pretty substantial increase, going from $636.179 million in 2023 all the way up to $1,473.730 million in 2024.
Wow, that's a big change.
It is, and it's interesting because the report actually mentions a decrease in receivables in 2023.
Oh, really?
Yeah, because they were getting better at collecting payments.
So this big jump in 2024, that could be a sign of like a lot more sales happening.
Yeah, it could.
And they break down those receivables, right?
Right, they do.
So are they actually getting paid on time?
Well, the good news is that most of them, about 63%, are current.
So they're expected to be paid soon.
And only a tiny fraction, like 7%, are past due by more than 90 days.
That's not bad at all.
And those are mostly related to advances they've given out.
So even with all those extra sales, it seems like they're managing their credit risk pretty well.
Yeah, they're on top of it.
Okay, so lots of cash, a big jump in receivables. What about their inventories?
Well, that actually decreased a little bit from $1,251.291 million in 2023 to $1,148.044 million in 2024.
Interesting.
It could mean they're getting better at managing their inventory.
So holding less stock compared to their sales.
Yeah, or it could simply be that they're selling more, which would draw down their inventory levels.
Either way, it seems like a positive sign. Right.
Yeah, definitely.
Okay, so that covers the short-term assets, the things they can quickly turn into cash.
Right.
What about the non-current assets?
These are the long-term investments, the stuff they hold for more than a year.
What kind of changes did you see there?
Well, their property, plant, and equipment, that's basically their infrastructure for manufacturing.
Right, the big ticket items.
That stayed pretty stable, actually. Just a tiny dip from 3,859.606 million in 2023 to 3,849.179 million in 2024.
So no huge changes there.
But they did keep investing in those areas, you know.
Oh, yeah.
Yeah, they added 180.275 million worth of stuff in 2024.
So they're not letting their equipment get outdated.
Exactly, keeping things up to date.
And that's a bit less than the 200.195 million they invested in 2023.
Right, a slight decrease.
Anything else stand out in the non-current assets?
Yeah, there's this new thing in 2024, a right-of-use asset.
I think I've heard of that. It's because of those new lease accounting rules, right?
Exactly, it's worth 55.795 million.
So it represents the value of their right to use leased assets.
Yeah, basically.
Makes sense. Any other big changes in their long-term assets?
Their deferred tax assets, net, went down a bit from 138.574 million in 2023 to 107.656 million in 2024.
Without getting too deep into the tax stuff, what could that mean?
It could be because of changes in their taxable income or their tax liabilities. Hard to say without digging into the details.
Right, we need more information.
And also, their retirement plan assets, they were at 2.906 million in 2023, but they dropped to 0 in 2024.
Oh, that's interesting.
Yeah, it suggests something changed with how they're handling their retirement obligations.
Maybe they switched to a different plan or something.
Could be. That's something worth looking into in the footnotes.
Definitely. All right, so we've covered what they own. Now let's talk about what they owe.
The liabilities.
Starting with the current liabilities, the ones they have to pay within the next year.
Right, so their loans payable, they went up a little from 811.985 million in 2023 to 857.325 million in 2024.
Not a huge increase, but still an increase.
Yeah, and the report actually gives us the interest rate ranges for those loans, which is helpful to know.
Yeah, it gives us an idea of their financing costs.
But the bigger change is in their accounts payable and accrued expenses.
That's what they owe to suppliers and for other short-term stuff.
Right, and that jumped up quite a bit from 406.490 million in 2023 to 683.002 million in 2024.
Whoa, that's a pretty big jump.
It is, and it could be directly related to that increase in business activity we were talking about.
Higher revenues, buying more stuff.
Exactly. Or maybe they've changed their payment terms with suppliers. Hard to say for sure.
Okay, so more short-term debt. What about their long-term liabilities, the ones that are due further down the road?
Well, there's that lease liability we talked about for 70.305 million in 2024.
Right, that goes hand in hand with the right-of-use asset.
Exactly. It was 0 in 2023 because those lease accounting changes hadn't kicked in yet.
Okay, that makes sense.
And their other non-current liability, the security deposit on that leased facility, it stayed pretty much the same, 1,000 million.
So no big changes there?
Nope.
All right, so we've looked at their assets, their liabilities. Now let's tackle the equity section.
This is the fun part.
This is where we see what the owner's stake in the company is.
And this is where the profitability really shows up.
So what did you see there?
Huge changes, really dramatic.
In a good way.
Oh, yeah, definitely. Their retained earnings, that's basically their accumulated profit over time.
Okay.
It went from a massive deficit of 818.039 million in 2023 to a solid profit of 688.358 million in 2024.
Wow, that's a huge swing in the right direction.
And it's all because of their net income for the year, which we'll see when we look at the income statement.
So they went from deep in the red to solidly profitable.
That's a pretty impressive turnaround.
Anything else notable in the equity section?
Yeah, their treasury shares went up.
That's because of their share buyback program, right?
Exactly. They started that in September 2024.
And by the end of the year, they'd bought back a lot of their own shares, 201,594,500 shares to be exact, at a cost of 584 million. So they're reducing the number of shares out there in the market.
Yeah.
Okay, so the balance sheet paints a pretty clear picture.
Definitely.
More cash on hand, a jump in what people owe them, probably due to higher sales,
Stable long-term assets, a manageable increase in some liabilities.
and a much stronger equity position thanks to that return to profitability.
It's a good sign.
Now let's dig into the income statement.
This is where we see how they actually made that profit.
The nitty-gritty of revenues and expenses.
Exactly.
So what jumped out at you when you compared 2024 to 2023?
Well, the first thing is their revenue went up, like, a lot, by 38%.
48%? That's huge.
From 7,271.651 million in 2023 to $10,034.436 million in 2024.
So they're bringing in a lot more money.
A lot more.
And was that growth across the board, or was it concentrated in certain areas?
It was both domestic and international sales, so pretty much everything grew.
Strong demand all around.
Yeah, looks like it.
Okay, so more revenue, but what about the cost of generating all that extra business? Did their cost of sales go up too?
It did. It went from $4,709 million in 2023 to $6,991 million in 2024.
So it went up, but did it go up at the same rate as revenue?
Actually, no. The percentage of their cost of sales compared to their revenue, it stayed pretty much the same.
So even though they were producing and selling more, they were able to manage their costs pretty effectively.
Yeah, they kept things under control.
Which means
Higher gross profit.
Exactly. They had more revenue, and they kept their costs in check, so their gross profit got a nice boost.
It's a good formula.
All right, so what about their operating expenses, the costs of actually running the business?
Their general and administrative expenses, they went up a little, from $392.088 million in 2023 to $430.298 million in 2024.
Not a huge increase, considering how much their business grew.
Yeah, they managed to keep those overhead costs relatively low.
Now, there's this line on the income statement called other income loss. Sometimes there are interesting things hidden in there. What did you find for Axelum?
Oh, this is a big one. They went from a loss of $121.374 million in 2023 to a gain of $140.184 million in 2024.
Wow, that's a huge swing.
Yeah, and a big part of that is because of their inventory write-down.
Oh, right, they had a big one in 2023.
A whopping $200.225 million. Ouch. But in 2024, it was much smaller, only $14.675 million.
So that alone made a big difference.
And then there's that increased interest income we talked about earlier.
From their cash holdings.
Exactly. That also contributed to the positive swing.
Okay, so smaller write-down, more interest income, both good things for their profitability.
Definitely.
Now, what about the interest they had to pay on their loans?
Their interest expense went up by 29%, from $64.12 million in 2023 to $80.829 million in 2024.
So their borrowing cost went up.
Yeah. And they say that's mainly because they had more loans outstanding and because interest rates went up at one of their subsidiaries, RVF. So putting all that together, all those changes in revenue, costs, other income and expenses, what was the bottom line?
What was their overall profitability like?
Night and day, really.
Oh, yeah.
Their income before income taxes went from a loss of $985.745 million in 2023 to a profit of $776.780 million in 2024.
So they went from a big loss to a solid profit.
And the same thing with their net income. It went from a loss of $818.039 million in 2023 to a profit of $688.358 million in 2024.
That's a remarkable turnaround from deep in the red to comfortably in the black.
Yeah, really impressive.
Did they mention any key financial ratios that reflect this improvement?
Yeah, their return on equity, that's how well they're using shareholders' money to make a profit. It went from negative 8% to positive 6%.
So a much better return for investors.
And their return on total assets, which is how well they're using all their assets to generate profit, it also went from negative 7% to positive 6%.
So they're using their resources much more effectively.
Yes.
All right, so the income statement shows a clear recovery, higher revenues, better cost management, and that all leads to more profit.
Yeah, a strong year for them.
But let's see how those profits translated into actual cash flow. That's where the rubber meets the road.
That's the cash flow statement.
Exactly. So what did you see there when comparing 2024 to 2023?
Well, their cash flow from operations, that's the cash they generate from their main business activities, it more than tripled.
More than tripled. That's a lot.
Going from $127.177 million in 2023 to a healthy game $551.400 million in 2024.
So they're bringing in a lot more cash from their day-to-day operations.
And that's mainly because their operating income was so much higher in 2024. Remember, they had an operating loss in 2023.
Right. So when you're more profitable, more cash flows in from your operations.
Makes sense.
What about their investing activities?
They were still investing quite a bit, but the cash outflow actually decreased a bit, going from $220.019 million in 2023 to $236.303 million in 2024.
So still putting money back into the business.
Yeah, and most of that went towards additions to their property, plant, and equipment.
So they're keeping their infrastructure up to date, investing for the future.
Exactly.
And finally, what about their cash flow from financing activities?
This is where they raise capital, manage their debt and equity, And it's interesting because it completely flipped between 2023 and 2024.
Oh, how so?
In 2023, they had a net cash inflow of $752.666 million from financing activities. A lot of that came from their IPO, remember?
Right, when they went public.
But in 2024, they actually had a net cash outflow of $51.793 million.
So they were using cash for financing activities instead of bringing cash in.
Yeah, mainly because they were paying back loans faster than they were taking out new ones.
Makes sense, especially if they're in a stronger financial position.
Right. And they were also buying back their own shares, remember?
Yeah, that share buyback program.
That would also use up some cash.
Okay, so the cash flow statement tells a pretty interesting story.
Definitely.
Now, beyond the numbers, what about the risks that the company faces?
Management, they always have to highlight the key risks in these filings.
Right, it's part of the deal.
And they mentioned the usual suspects, liquidity risk, credit risk,
Currency standard.
foreign currency risk. They do a lot of international business, so they're exposed to exchange rate fluctuations.
And interest rate risk, which we talked about earlier.
Right, because of their loans.
But they do point readers to note 23 for more details on all of that.
Yeah, if you want to dig deeper into the risk management stuff, that's where to go.
Okay, but were there any specific risks that they called out?
Yeah, one that they specifically mentioned was the risk of fraudulent premature revenue recognition.
That doesn't sound good.
It's not ideal, but it's something that can happen in any company, especially if there's pressure to meet targets.
So how are they addressing that?
They've got their auditors on it, doing specific procedures to make sure revenue is being recorded properly.
So they're checking things carefully.
Definitely.
Okay, what about risks related to their actual operations, like how they get their coconuts?
They mentioned that, actually, they said monitoring their raw material supply and dealing with price fluctuations is a key risk.
Makes sense. Coconuts are their bread and butter.
Exactly. So they've got a whole strategy for managing that.
Oh, yeah. What's that?
They do a lot of direct sourcing from farmers. They've got their own nut buying stations, and they keep a decent amount of inventory on hand just in case.
So they're trying to control as much of the supply chain as they can?
Yeah, and they also offer premium pricing to make sure they have a steady supply. And they've got a whole team dedicated to monitoring and forecasting supply and prices.
So they're taking it seriously.
They are. And they even mentioned plans to strengthen their nut buying department.
Sounds like they're really committed to securing their supply of coconuts.
Absolutely.
Now, let's flip the script and talk about opportunities. What did the management team see on the horizon?
They're really excited about product development and innovation.
Makes sense. The market's always changing.
And they've got their own R&D team working on that.
But their spending on R&D, it's less than 1% of their total sales.
Yeah, it's not a huge amount.
Maybe they're being really targeted with their research efforts.
Could be.
What other opportunities did they mention?
They talked about those acquisitions they made back in 2017, APH1 and APH2.
Right, they bought those companies.
And they say those acquisitions are still giving them a lot of growth potential.
So those deals are still paying off.
And they're also focusing on their subsidiaries in key international markets, RVF in the U.S. and FIA in Australia.
So they're looking to grow internationally.
Yeah, they see a lot of potential there.
Makes sense. Coconuts are pretty popular worldwide.
What about opportunities to improve their operations, make things more efficient?
Did they mention anything about that?
They did. They talked about their modernization program.
What's that all about?
They're trying to make their operations more energy efficient, which would lower their production costs.
So saving money and being more sustainable.
Exactly.
Give me an example of what they're doing.
They're putting in new boiler equipment that'll make it more efficient to convert coconut shells into steam.
Steam? What do they use that for?
It's part of their production process.
Yeah.
And they're also talking to renewable energy companies about installing solar panels.
Oh, wow. That's a big step.
Yeah. Shows they're committed to sustainability, and it could save them a lot of money on energy costs.
When do you think that'll be finished?
They're aiming to have the solar panel project done within the next 2 to 3 years.
So a long-term investment that'll pay off in the long run.
Exactly.
Any other notable opportunities they mention?
They talked about their tree growing initiatives.
Planting more coconut trees.
Yeah. They see that as a way to ensure a stable supply of raw materials in the future. Plus, it's good for the environment.
Oh, win-win.
And they also made a change to their dividend policy.
Oh, what did they do?
They increased the potential payout rate to up to 30% of the previous year's net income.
So they could be giving more money back to shareholders?
Yeah, which could be a sign that they're confident about their future profitability.
Speaking of the future, did they actually give any concrete guidance about their expectations for future revenues and earnings?
It's funny, they didn't give any specific numbers.
Really?
Yeah, a lot of companies are hesitant to make precise predictions in these filings.
It's understandable you don't want to overpromise and underdeliver.
Right, exactly.
But even without hard numbers, can we glean anything about their outlook from what they did say?
I think so. They talked about all these growth opportunities. Their performance in 2024 was really strong.
And they've got these strategic initiatives in place, like the modernization program and the international expansion.
Plus, they're investing in solar panels, which is a pretty clear sign that they're thinking long-term.
And they're increasing their dividend payout, which suggests they're confident about their future cash flow.
Yeah, all of those things point towards a positive outlook, even if they're not giving us specific numbers.
So reading between the lines, they seem optimistic about the future. All right, well, this has been a really insightful look at Axelum's financial story.
Yeah, they've come a long way in a year.
They really have. So let's recap. What are the key takeaways?
Big financial turnaround in 2024, much higher revenue, a return to profitability.
Their balance sheet looks good. They've got more cash. Receivables are up, probably due to higher sales.
And their cash flow from operations is strong, which is always a good sign.
And they're focused on growth, expanding internationally, improving their operations, and managing risks.
And even though they didn't give us specific financial projections,
They did highlight a lot of positive indicators, those strategic initiatives, the investments they're making.
the dividend increase,
All of that suggests that they're on a good path.
definitely.
So for our listeners out there, think about this. How will Axelum's international expansion, combined with their commitment to sustainability, impact their future success in the global coconut market?
It's a question worth pondering.
And if you want to really deep dive into their financials, their full SEC filing is available online.
We've just scratched the surface here.
Hopefully we've given you a good starting point.
That's the goal.
And that's a wrap for today's deep dive. Thanks for joining us.
We'll be back soon with more insights from the world of finance.
Until then, happy investing.
And stay informed.
We'll see you next time. Bye for now.
Bye.
Liked what you heard? Drop a comment, like, and share this episode. Hit subscribe and tap the notification bell. We've got more insightful market ideas coming your way. Catch you on the next one.